So welcome back, everybody, and let's talk a little bit about now the so-called refinance loans. These credit instruments can be called refinance loans or state-subsidized loans. Here you can see a graph with an increasing Euribor rate, and I also copied their question mark. And what's the question in this case? The question is that how you finance corporations when the increasing interest rates are basically harming that much that corporations cannot get the sufficient funds from financing institutions. So, what do you say? What is the potential solution for that? Well, in this case, the state has a huge impact on the credit markets because the state has the ability to provide cheap loans to the economy. And how the state does it? Well, in this case, the state will finance the banks directly. The state will provide cheap funds for the banks, let's say 1% instead of the 5% market rate, and the banks will lend it towards the clients. After and during the COVID-19, especially in Western and Eastern Europe, importance and presence of such loans started increasing because the rates were that high that the corporations couldn't get cheap funds. For example, some companies even had to shut down the operations because some of the operations was financed directly by loans. Let's go a little bit further. So the first question is that why such credit exists? Well, refinance loans, as I've said in the banking, refer to such kind of credits which are provided as external financing resources such as governments and central banks, and their pricing is kind of cheap and favorable. They are not directly provided from commercial banks, as you have seen it in the previous slide. Rather, they just distribute it to the economy from the external resource. The importance, as I have said, the importance of such constructions is to increase liquidity, primarily due to the COVID-19 pandemic, wherein many SMEs, so the smaller companies, started suffering from liquidity needs. And why such credit exists? Well, the reason is very simple. I just want to summarize it and highlight it again, that this credit offer favorable pricing, low fees, if any, and generally they provide lower cost to customers. And it's also very important to understand is that such credits are often sold or distributed by the state within one packages. So I don't know, they have a certain name, they have a certain limit, and basically they are distributed in the markets as a state product. Let's see now, Axel, how such credits actually work.